Welcome. I'm your host, Henri Arslanian, and welcome to this episode of the Future Money Podcast. Again, before I start, I want to say a big thank you to the 500,000 of you who follow my content each week. This podcast, The Future Money, is now ranked in the top 5% of all podcasts globally on Spotify. Thousands of you from over 160 countries are tuning in each week. So a massive thank you for all your support. As all you loyal listeners know, my goal with this podcast is very simple. It's to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact can be on the future of finance and the future of money. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados and discuss some of these topics. Today, actually, the show is a very special one. It's really on the topic of crypto derivatives. I got many requests over the last couple of weeks and months from many of you around the world asking me to cover this topic to try to understand where are we with crypto derivatives, how do they compare to crypto spot markets, and how do crypto derivatives actually compare with traditional derivatives in the traditional financial world. So if you like derivatives, you like crypto derivatives, this show is for you. And to do this today, I'm very excited to be joined by Mr. Darius, who is the founder and CIO of QCP, from Singapore. Darius, great to have you with us on the show today.
Thank you, Henri. Very good to be here.
One thing, by the way, many people don't know about Darius. Obviously, many people, especially in the crypto community, know him as the founder of QCP. But Darius actually in university studied religion along with finance at NUS, and he was actually specialized in really monotheistic religions. Darius, I have to say, that's a hell of a background, and I guess very relevant to the world of crypto, where many people will kind of make it similar to religion.
Exactly. I think crypto is, some people see it as a capital market, some people see it as a religion, so got the best of both worlds.
Darius and I were talking before we went online. I think, I sit on the board of the Armenian Church of Singapore, which is interesting. Fun fact is actually the first, not only the first church of Singapore, but the first building with air conditioning in Singapore.
I didn't know that. Interesting.
That's one of the fun facts of I like to mention when I'm in Singapore on that perspective. Well, Darius, let's jump right in. I mean, there's a lot to cover today. I want to talk about crypto options, crypto futures, crypto perps, really exotic products, structured products. Again, because of the nature of this episode today, I just want to remind our audience that nothing we discuss in this show is meant to be investment advice. It's really here for educational and information purposes only. Darius, before we jump in, can you maybe share more about your personal background and also what is QCP and what do you guys do at QCP?
I'll be happy to. So my name is Darius. I'm the founder of QCP Capital. I come from quite a finance background. I started my career at a hedge fund called Diamond Asia out in Singapore. Spent a year in BNP Paribas in Singapore and New York managing FX and Asia FX and rates. And that's when I started crypto. I started in 2016. I didn't actually know what crypto was. All I knew was that this asset, Bitcoin, was priced differently in Singapore as it was in Korea and Australia and India and whatnot. So to me, it was an arbitrage. It was an arbitrage opportunity. Started arbitraging, and then in doing so, you find out what the asset is, and you're like, okay, this is something, and this is going to mean something. Left my job in 2017, started QCP. QCP was one of the first trading desks to be set up in Singapore, crypto trading desk. We were also one of the first in the world to do options in 2018. Today we have a spot desk, we have a rates and forwards desk, we have an options desk. We are one of the largest option market makers globally. We focus a lot on vanilla options, exotic options, structured products, we're trying to establish ourselves globally, but we are based in Singapore. We have just opened an office in Abu Dhabi as well.
I want to talk about that as well. Very interesting. So let's talk about, I think, for the crypto derivative experts who are listening, I apologize for the next 5 minutes. You can fast forward. But Darius, for a lot of the people that are listening, can you give us a bit of an overview of what are we? What is the state of crypto derivatives? In particular, what is the state of crypto? Let's start with crypto options to start, and then I want to move on to futures and perps. But can you say maybe what are we seeing on the market now when it comes to crypto options, and how are crypto options similar or dissimilar to what we see in options on equities and other instruments?
So crypto options, it's very interesting because the underlying volatility of the underlying asset, right? So Bitcoin, Ether, altcoins, the volatility is very high, and options, of course, a volatility-based product. Crypto options are quite unique in the sense that they are not exactly like equity options and also not exactly like FX options, somewhere in between. So it's a bit half-half, right? 50-50. I would say about 60% of crypto options are traded as listed instruments. So in that respect, they are very similar to equity options. But at the same time, there's a very big part of the crypto options market that is dealt OTC, bilateral, and that is more similar to FX options. So it's almost like a hybrid of the two big option markets in traditional finance.
So, and what do you see when you look at the? I mean, you mentioned obviously there's a big chunk of it that is traded OTC, a big chunk of it is traded on exchange. And when you look at the evolution of crypto options, right? How do you see the next couple of years? Do you expect more and more activity? Do you believe that open interest will increase? What are you seeing on that perspective on the option side?
That's a very good question. We started trading crypto options in 2018. And the reason why we started was, we were looking for ways to hedge our long Bitcoin, long Ether portfolio. Looked at the option market. The realized volatility of the asset at the time was probably about 100%. And then you look at the crypto options market, and the implied volatility means that the prices that the options were trading at was 150%. To give you some perspective, Euro dollar options probably traded at around 4%, right? So for a guy who traded FX options, this was crazy, absolutely insane. You have to get involved. Number one, it's extremely inefficient. Inefficiency means there's alpha to be made from arbitrage. Number two, the vol base is just so high. There's so many things you can do with it. And back then it was very, very small. I remember, it was only Darius that was trading it, very tiny. No one was really trading crypto options. For us, it just made sense to buy, sell some, just to hedge our books, get some yield. And I met the Darius guys for the first time in 2018 in Tokyo, of all places, right? These two random Dutch guys, in a booth. And Darius was completely unknown then. And started trading there, and ever since then, I've always had this view, to answer your question, I've always had this view that the crypto options market would be huge. Because if you look at traditional options, let's look at one single asset, gold. Gold options, in terms of notional traded, it's about 8 times the spot. Yeah. Right. In crypto right now, it's still probably options only about 2% of spot or 2% of Delta One. Yeah. So if we think that crypto, or rather Bitcoin, let's say Bitcoin alone is going to be the next the digital gold, and it's going to have the same parallel growth, you're talking about multiples in terms of growth of the crypto options market, and we have been seeing that already. The evolution in terms of who's been trading from very gung-ho individuals who used to trade commodities and used to volatility, high net worth guys who started trading options with us. Today, the people that we trade with are guys like Goldman Sachs, top hedge funds. So you are seeing these guys get involved, bringing in their size, and to them it's very natural because to them, options is dealing with crypto spot and managing custody and all this might be a bit challenging because it's very different from traditional finance. But options as an instrument is very familiar, right? The mechanism of settlement, the trading, the vols, the way you do the math behind it, very similar, just there's different underlying. So it becomes a very easy entryway for institutional guys. To them, it's just same instrument, different underlying, plug and play. So I think this is where the next frontier of growth is, purely because it's familiar to institutional guys and financial institutions.
You raise very good points, Darius. When I teach topics or I teach crypto derivatives, I often give the same analogy of it's actually quite incredible how small still the crypto options market is compared to the spot market. And when you compare it to traditional finance, you mentioned gold, but you can look at the same example for other instruments as well. And I think the second point you made is very relevant because You mentioned before like basis trading, right? But like for a lot of these traders, it's pure arbitrage. They don't care actually what the underlying instrument of the option is. It's just from pure mathematics perspective, there's a arbitrage to be done, and like you said, I think for a lot of the trading desk of traditional hedge funds, that's often the natural step to come in. But I want to talk about one thing you mentioned. You mentioned Deribit, which is a crypto exchange, a couple of minutes ago. Obviously, when we look at the crypto options market today, Deribit is by far the biggest player. I don't know the exact percentages, but it's by far the biggest player. When you look at the ecosystem right now, do you think this is going to change? You think we'll still have a dominant player as in Deribit, or you think the some of the other exchanges, will come and gradually eat the lunch of Deribit, or you think some of the activity will move OTC? How do you see the future landscape when it comes to the counterparties and exchanges when it comes to crypto options?
Very interesting question again. So to be just to make sure that it's clear, we are shareholders of Deribit as well.
Yep.
So I will speak positively about Deribit. But in all seriousness, Deribit owns about 95% of the listed, 90 to 95% of the listed options market. So the next biggest ones are CME, Binance, and whatnot. So there are many layers to answer this question. First is, why is Deribit such a big dominant player? Right. It is not dominant because of its role as a liquidity venue, right? For liquidity venue, if you look at Deribit order books, I mean, it's liquid, but I would say that most of its utility, or rather say 60% of the reason why Deribit is so dominant is because not only is it a liquidity venue, it is also a default venue for settlement and clearing.
Yep.
So unlike traditional finance markets, right, where you have clearers, prime brokers, and a whole string of intermediaries, as well as the exchange where price discovery is happening on the order books, Deribit is the order book, the biggest order book, but it's also the de facto clearer. And I give you an illustration as to what I mean by this. For us as a block trading and also OTC specialists in options, about 90% of our trades are actually traded on chats. The prices are agreed on the chats, and then we book it and clear it on Deribit, either directly or through Paradigm. So you can see this one I mean by the crypto options market is a bit of a hybrid, right? Deribit in this respect is dominant because it plays liquidity venue with the order book as well as settlement and clearing. And that's the reason why it's so dominant, right? Because there isn't any other intermediaries in between here. The next biggest one is of course CME, purely because CME is a regulated exchange, and it's the only exchange that US onshore guys can trade on because Deribit doesn't accept US onshore guys. It is a traditional venue, so it has a clearing, its own clearing house and the whole works of traditional finance. The problem with CME, of course, is that it only trades 5 days a week. You have to have a clearer, either a bank or one of these like Merex or one of these guys, to clear for you. So there are a lot of intermediaries there, and also because of that, because of the T+1 and the traditional way of clearing and settling, the margin cost is very high. So in general, CME costs about 3+ times the amount of Deribit for margin. So let me answer your question in another way as well. And this is something that I think is a bit philosophical, right? Our children in 10 years' time, when they start trading on exchanges, I'm not talking about just crypto, I'm talking about stocks, bonds and the usual. Do you think they will still be trading on exchanges that are T+1, T+2 settled, with clearers and a bunch of intermediaries in between? Or will it be a bit more like Deribit, where it's 24/7 markets, live margining, instant settlement? I think in general we move towards that, right? So it's not even a technological change. Underlying, when you move the assets, fine, it's on the blockchain, but it's really just a methodology change here, right? Where we are talking about lower margin costs because you don't have the T+1, T+2. You're talking about instant settlement, 24/7 trading. I think the world moves towards this anyway. So sorry if it's a bit confusing, but Deribit is a native exchange, clearly, and even though and it's still it's regulated in Dubai, but it's still considered a native exchange. But to me, while it is native and traditional guys still trading on CME and more traditional venues, I think the way that Deribit trades is the future. So how do we see things going? Is it a merger of two worlds? Does CME become a bit more like Deribit? Does Deribit become a bit more like CME? I'm not sure. But to me, Deribit presents not just a options dominant, a exchange that is dominant in options for crypto, but possibly the future of derivatives trading in general as well.
Interesting. I mean, there's a couple of things I want to focus on that you mentioned, Darius. Which I think will be relevant to our audience. One of them is on the clearing side, right? So obviously, in traditional finance, if we take a step back, there's been a massive debate whether the clearing houses and what they call the CCP, central clearing, should be completely separated to basically mitigate counterparty risk. And I know it's a bit ironic this in crypto as well. And you mentioned obviously how T+1, T+2 happens in the clearing houses, but do you think there's a deribit on the option side? We'll talk about other asset classes afterwards. Is that lack of separation is potentially a systemic risk when it comes to the options market in crypto, or you think it's
Absolutely.
actually not that relevant?
I'll be frank and honest here. Absolutely, right. There are multiple points of failure here, and the reason why we have the traditional CCP system is to sort of separate the different points of failure. So with that said, I think valid point. But even Deribit admits that that this system can operate with a central clearing party, but still be 24/7 settlement and live margining T+0. So I think that's what I mean by. I think eventually we find some middle ground here, right? You do create some separation to eliminate the single point of failure. However, you keep the efficiencies of the blockchain settlement and the methodology of the way crypto capital markets trade.
And when it comes to the other side, let's just talk about the CME. Like you mentioned, it's open 5 days a week, right? Which also gives some arbitrage opportunities to firms like yourselves. But do you believe this CME options market right now? Obviously, it has a very dominant role because for a lot of the onshore US market participants, that's probably the only place where they can trade at scale. But do you believe as the ecosystem evolves, the CME itself will need to evolve from not being open Monday to Friday in order to be able to compete with not only Deribit, but frankly, with any other new crypto options platforms that may be there in the future?
I have had this conversation with CME, but obviously, crypto is a very small part of CME, so I don't see them becoming a 24/7 exchange anytime soon. They are looking at various products that like rates, crypto rates related products and a few other things, and they are responding and they are quite aggressive in terms of their productization. But again, CME, the crypto options is a very small part of CME. Crypto itself is a very small part of CME. But you're right on the point where it has become very important, especially with the ETF, right? I'll give you a real example for this. Earlier this year, typically it's always Deribit or Binance that anchors the forwards, the vols in the space. And in this particular example, I'm talking about the forward rate, right? But because of the impending ETF, what we saw was CME 1 month contract became the anchor for the forward. It traded up to 30%, 40% annualized. And the reason I think for this was that a lot of the US players who were parking their long position wanted to, like ARK and a few of these guys who had long Bitcoin position, wanted to park it into their ETF, had no other choice but to park it into CME 1 month first, right? So, and then you also have speculators part of this. So it drove the CME 1 month to record highs, and this actually dragged the other exchanges as well. We dragged all the native exchanges forwards higher and pushed the whole forward curve higher. And you saw the CME being the anchor of it. So to me, that was very interesting. That was the first sign of this US onshoreization, right? Of bringing the asset onshore and becoming the dominant domicile for crypto or rather Bitcoin in this case as an asset class. So a lot of interesting dynamics with the ETF coming into play, especially for derivatives, because the next thing in line that's going to be a potential game changer is going to be the ETF options, right? Obviously, it's going to be even yet. So Darius is crypto settled, crypto collateral, crypto options. CME is dollar margin crypto options, right? And now you're going to have dollar cash traded options on like NYSE or Nasdaq on the ETF. So you're gonna have create many different markets. It should be very interesting for most institutional players to have this many options in terms of being able to trade derivatives.
So just on that point, what do you think would it take for us to have ETF options? Do you think it's a matter of time? It's a question of liquidity. What do you think will be the triggers for us to have a meaningful market when it comes to ETF options?
There are already a lot of the requests have already been put in. So right now, I think we're just pending an SEC approval. So it's a matter of time, and it should be a very short time.
Interesting. And so one more question I'll ask about clearing, and then we'll move on to other types of derivative instruments. But there was, I'm sure, as you know, the last couple of months, numerous initiatives. In particular, one that pops to mind is the London Clearinghouse, the LCH, on these clearinghouse model for crypto instruments. What's your view on some of these initiatives that we are seeing from the likes of LCH? And to tie back to your initial comment, do you believe that is these traditional players that will play a role in this kind of clearinghouse model, or are we going to have new crypto models that will emerge, whether it's using DeFi or on-chain solutions and the likes?
This is an extremely important question, and I'll tell you why. When I first started, trading options and in the crypto space in general in 2017, the thing that excited me most and the opportunity was the formation of market structures and this creation of the capital markets that was not existent in crypto. So to me, I was like, yeah. In fact, I actually told people this, that the crypto markets are very inefficient now. In 5 years' time, we're going to see it very efficient. The markets are going to be developed and everything. The truth is, 5 years later, it's possibly less efficient than it was before. And let me explain why I say that. We actually, to this day, we don't have a rates market in crypto, right? We don't have a repo market. We don't have an interest rate curve. Every exchange has a different forward curve. Forwards are not actively traded. And as you know, rates are the heart of any capital market. And in crypto, to this day, we still don't have one. And the fact that we don't have one is possibly one of the reasons why we suffered all the trauma of the last 2 years as well, right? Don't have a forward curve. You're not able to price credit. You're not able to price loans and borrowing lending properly. It's all over the place. You have guys who abuse that, right? So to me, having a rates curve is going to be a very important play, and I think a very valuable play in the space going forward. And how do you get a rates curve, right? How do you have a LIBOR, and rates curves in the traditional markets? There is a credit backstop to all of this. The sovereign is a credit backstop. So let's look at it from that perspective, right? To answer your question, whether it's important for an LCH and some of these traditional players to step in, it's extremely important. I think it's extremely important for them to step in, firstly because they bring credibility. There's a credit backstop. A credit backstop and a proper market structure is what's required to start having a proper crypto rates market. So we're seeing the fragments come to play, very slowly, right? LCH getting involved, now that the ETF is involved, the US is getting involved as well. I think that we start to see a few more sovereigns get involved. And when you start to see sovereigns saying that, look, this is a repo market, I'm the backstop liquidity, buck stops with me, then you start to have a properly priced rate curve. So you start to have a crypto LIBOR equivalent somehow. Again, I'm not sure how this plays out exactly. There are a lot of experiments in DeFi and whatnot. But to me, I just having a chat today with someone building an ETH rates curve, for example. And my point to him was, look, you need a credit backstop. You need somebody. You need a big bank or sovereign or one of these regulators involved to just say that buck stops with me. Then you can build your curve based on this on knowing that there is no credit risk at some point. So sorry to be long-winded, but I think it's a very important question to address. Yeah. I always feel like the crypto options market is a bit like the tail wagging the dog, right? A lot of times the options market is how you derive your rates curve, when it usually is the other way around. Correct. So we're going in reverse, but I think we're getting there. The right names are getting involved. So to answer your question simply, yes, they're very important, and I think they will be very important going forward.
Quick tangent I want to make on the sovereign side. If you're a betting man, Darius, who do you think would be some of the first sovereign, let's call it entities or groups that we'll see involved in this?
Hard to say. Hard to say. I mean, if we look back in the past 5 years, if you asked me in 2018, I might have said Japan. If you ask me in 2019, 20, I might have said Singapore, Hong Kong.
Yeah.
And then today, what we see is that most of the Bitcoin is custody in the US. So who the hell knows?
I remember those days where I'm like in Japan was the epicenter of crypto. There was even a phase I would even argue Korea. There was so much activity going on. Hong Kong, Singapore. I think we both lived that. And I would even argue now there's so much activity in the UAE as well, where actually you're setting up in Abu Dhabi as well. It's such an interesting dynamism on that side as well. There's this one thing, Darius, you mentioned. I want to also tackle a bit. You mentioned obviously the arbitrages happening on markets being efficient, right? And I agree with you that whenever, even for my fund, the fund where I'm a shareholder, we do a lot of funding arb, basis arb, and a lot of these arbitrage strategies. And whenever I talk to investors, often they tell me, yeah, Henri, there's arbitrage opportunities now, but these will go away. And unfortunately, I think often my answer to them is if you look in traditional finance, many of these old school ARBs are still there. A good one, you're based in Asia, the share ARB for Chinese stocks, for example. And what do you think? Do you think this, and you mentioned that you think this inefficiency of markets will continue for some time. And do you actually believe that this will give rise to even more opportunities for trading, just as the ecosystem grows, there's new instruments coming up? Or do you believe at one point with the entry of institutional players, with the entry of more sophisticated players, even quantitative traders, at one point these inefficiencies will narrow inherently just because of the size of the market?
The actual answer is yes to both, right? So I'll give you a real example. Let's say in a very specific theater, right? Let's say Darius, for example, right? When we first started, the spreads are wide. You can make markets doing a very simple trades, but then you get with big spreads and more volume coming in, you get all the HFT guys coming. The market gets more efficient. So that's one thing. It does get more efficient, right? In specific theaters, but then in terms of market structure, from a macro structure, you then have different segments in different theaters. So for example, it might get more efficient within Darius itself, but then you throw in a CME and it's completely settled in a different way, different format. Then, like I mentioned again, you throw in spot ETF options, right? And then there's a whole different dynamic as well, because spot ETF options, most of the guys there are not leveraged. They're all cash long, and they tend to buy puts. So the skew might be different from what you see at the CME, which is more people who are leveraged looking to buy calls. So you might get different skews, and then there's arbitrage opportunities there. So it's never a yes or no answer to that, right? Certain theaters will have some developments and and it always trends towards more efficiency because people come into opportunities. But then you have macro factors that create breakages and different market segments in different domiciles. So like you said, you will always find these kinds of inefficiencies even in modern, even in traditional markets where you have different types of market segments in different domiciles and different jurisdictions.
It's super interesting. That's what I find. That's why I find arbitrage so interesting on that side. Actually makes things so much more efficient as well. I want to move on. I think from options to the futures world. And obviously, right now, I was recording a video this week where I mentioned how on the CME we just hit record open interest. I think it's over 10 billion, 10 yards when it comes to Bitcoin open interest. And what do you think? How do you see right now the landscape when it comes to let's talk about not only Bitcoin, but the crypto futures, and also how does that compare with crypto, let's call it derivatives or perpetual swaps on crypto exchanges?
Let's start with the perpetual swaps to answer your question backwards. The perpetual swap was invention by Arthur Hayes, and it was a genius one, right? It's basically similar to overnight or Tom Nick's position in FX, right?
Actually, maybe let's explain to our audience how a perpetual swaps works, actually, to make sure everybody understands how the funding mechanism works and how it does not settle. I think again, for those experts in the room on perpetual swaps, I apologize, but I just want to take 2 minutes. If you can, Darius, explain what is a perpetual swap and how does the mechanism work, especially the funding mechanism, to make sure that the audience is fully aware of it.
Right. So perpetual swaps is somewhere in between spot and futures, right? So if you look at CME versus let's say spot, BTC spot, you can use cash, you use dollars to buy spot, right? It's an unleveraged product. You can borrow dollars to buy spot to make it leveraged, but the product itself is just you use dollars. $1, you buy $1 worth of Bitcoin. If you do it in the futures, with 30 cents, you can buy $1 worth of Bitcoin because it's a derivatives contract. It gives you leverage. There's embedded leverage within the contract. So let's say you buy a CME 1 month future. 30 cents, you can get exposure to $1 worth of Bitcoin. However, the future contract expires, right? At the end of 1 month, it will settle at a certain rate, and so that you calculate your profit or loss on that. The perpetual swap is a genius invention which basically allows you to get the best of both worlds, right? You keep a constant position. So let's say you can use a constant position with leverage. So it's in between. It's like a spot product, but it provides you leverage. So with let's say 20 cents of margin, you can get exposure to $1 of Bitcoin. The catch here is that there's a funding rate, right? Every 6 hours, depending on how far the perpetual swap contract trades from spot, it will calculate whether you pay funding or receive funding. So genius concept because it gives you constant exposure to spot without having to expire and roll. At the same time, it provides leverage as well.
Yeah, and for the benefit of our audience, I mean that's a beauty of this instrument. So if you're long the instrument, you're paying the shorts this funding rate every 8 hours, which is the funding rate that Darius mentioned on that side.
And most importantly, it brought a lot of liquidity to crypto because it allowed you to go very leverage on a spot product, right? Yeah. Which previously wasn't available.
Exactly. Last time I checked, actually, it was like I think something 3-4x the CME futures. I mean, it's quite interesting, the volumes on the open interest there. And maybe if there's on your perspective, right, when it comes to the futures market and the perpetual swaps, how do you see these two instruments evolve? Like you mentioned, there's some differences in each one of them. One does not never settles. You don't need to roll them over. But obviously, a lot of traditional investors, especially the U.S. onshore market, is very familiar with how futures work. How do you see this? Let's call them the futures and the perp market. Let's bundle them together for this question. Evolve over the next couple of months and years.
Firstly, I think it's not a new thing. FX traders are very familiar with this because FX traders have the same issue, right? When we trade spot, we have to keep rolling it overnight, Tom Nicks. So versus rolling it 1 month. So there's always a curve. So if you understand perpetual swaps, it's basically a very, very short curve, a very, very short front end of the curve, and then 1 month, 2 month, 3 month, 4 month. I'm very sure that CME is going to come up with a perpetual swap at some point because really? Why not? It's not difficult for them to do. All they have to come up with is a mechanism to calculate the funding, and then you have CME that has perpetual swaps and futures, and then you also have all the native exchanges that also have perpetual swaps and futures, and it becomes pretty similar. The only difference being that one is probably USDT margin or USDC margin, the other one is dollar margin with T+1.
I mean, I agree with you. I think the only thing is whether the CME will be able to handle USDC and USDT margin. It's when your margin is on crypto, it's a bit different when it's in dollars. But that's an interesting point of view, actually.
Absolutely, yeah. I won't be surprised if they start taking USDC margin, right? Because USDC, is familiar to them as well, or whatever stablecoin that is regulated in the States. Very possible, very possible.
Actually, it brings to my other question, Darius, because it could be also good for our audience if you can explain. I think there's two kinds of margin in the crypto derivatives market, right? There's let's call them cash margin, or let's even for this USDC, USDT margin, and there's also coin margin, right? When it comes to, let's say, Bitcoin. And can you maybe explain to our audience where are we seeing the most volumes right now, whether it's US dollar margin or it's in coin or BTC margin, and how do you see this kind of margin trend evolve over the next couple of months and years?
By virtue of the fact that the native exchanges were not able to take dollars at the start, and this is really going to change. But by virtue of the fact they weren't able to take dollars at the start, Darius, for example, was Bitcoin contracts margin by Bitcoin. So to give you an equivalent, think of it like, let's say you're trading Apple stock, and your margin is Apple stock, right? Yeah. So that's probably the best analogy. But it's unnatural for traditional finance guys, but because Binance and Darius and all the other exchanges, were naturally coin margined, all the major native traders got very used to it. With that said, this is changing very rapidly because of institutional guys getting involved. They want dollar margin, stablecoin margin. So all the native exchanges are slowly starting to do portfolio margining, meaning you can do cross collateral margining, portfolio margining, and they're starting to accept dollars. So if you look at Deribit, for example, all their new altcoin contracts are all dollar margined. So the two worlds are colliding, right? So the two worlds are colliding and trying to overlap. And I think at some point you're not going to see a difference between the two anymore, right? The traditional guys like CME are going to start looking more and more like native exchanges. Native exchanges are starting to look more and more like traditional exchanges as well. So matter of time.
It's going to be interesting. I think it's also interesting to add to what you said is if you look at a lot of the other, even you look at Bitcoin perps, ETH perps, again, those are mainly dollar margin, which is very interesting. Or, you Tether USDC or USDT margin, which is very, very interesting on that perspective as well. Interesting that you believe that there will be convergence at one point between these different models. So let's see what the future has in stock,
Absolutely. Very exciting.
Yeah. One other thing I want to mention is obviously if we continue obviously we talk about options, we talk about the futures market, we talk about the perps market. I would be remiss if we don't talk about the broader exotic market, structured products market. I get a lot of, for some reason, we have a lot of listeners in France actually of this podcast. And I know there's a number of these typical French engineers of the Grande École who often message me about these exotic products in crypto and my views about like financial engineering in crypto. Can you maybe share with our audience, what are you seeing when it comes to the broader, let's call them the structured products or exotics in crypto? And how do you think these products will be offered? Would it be offered by a desk like yours, for example? Would it be offered by the investment banks of the future who are putting these? Or even may we see crypto exchanges get into the space? Like, how do you see this landscape?
Very good question, Henry. I would say that the path is very similar to traditional finance. So let me give you a bit of a 1-minute history lesson on the path of crypto options. The first big scalable structured product was a very simple one, right? A dual currency instrument, right? A very common instrument in private banks for FX and equities and whatnot. Basically, selling covered calls and covered puts. So we were one of the first shops back then in 2019 to offer this. It was a very scalable product because of such a high yield. Selling covered calls and covered puts gave you a very, very, very high yield from the high volatility, right? So, and then very soon after, everybody started offering it. So that was the first structured product. So very early on already, we started seeing structured products. But this is just a packaged vanilla, which means that covered call, meaning that if you have one Bitcoin, you sell one Bitcoin call against it, right? If you have and if you have $1, you sell $1 of puts against it. If Bitcoin goes down, the worst that can happen is you buy the Bitcoin at the put strike. And if you have the Bitcoin and sell a call against it, the worst that can happen is you sell Bitcoin at the call strike. Simple product, right? And the path has developed very similar, in terms of the development of exotic products. It's very similar to what we see in FX, what we see in commodities, what we see in equities. The mathematics behind it is very similar as well. So, we are starting to see stuff like accumulators, FCNs, fixed coupon notes, the usual private bank suite, right? So our desk, for example, we're one of the first to offer some of these products. Our traders are all ex-FX traders, so we know exactly how to price these. And it become very popular, again, because of the unique features of crypto. Right, in FX you have a very very low forward curve. You have low vols. You can structure these, and they're quite attractive. It's meant to create specific scenarios and either increase the yield or increase the convexity. In crypto, it's a huge playground because the base yield is already like 20-30%. So the amount of things you can do in terms of how do you boost the yield to 50-100%, right? Or how do you create convexity? You give you a 100 times payout. Amazing, right? So worth exploring, especially if you have a very specific view of crypto prices, or if you have a very specific idea on what you want to achieve. Structured products, exotics make a lot of sense. I think, taking a step back on this, my golden rule for guys who ask me about exotics and structured products is, if you can achieve what you want to achieve without using options and only using spot, do it. Don't touch anything else, right? If there are certain objectives you want to achieve, like very high payout or a very high yield or a very specific time path, then you start to bring in options, start to bring in exotics and structured products. So I think these are things that you use in your arsenal as weapons to boost your yield or boost your return if you have specific views.
Yeah. I think there's always the challenges with leverage. You mentioned some of these like accumulators and some of these products by private banks. I was a financial markets hedge fund lawyer back in Hong Kong when these products exploded with the Lehman mini bonds, and tons of retail were actually hurt, and it created a whole decade of kind of financial reforms of investor protection they try to do on this side. Which brings me to my last question. Actually, when we talk about crypto derivatives, there was a big debate in the last couple of years whether such crypto derivatives should be offered to the retail public or should be only limited to institutional investors. Where do you think that the balance lies? Should crypto derivatives be offered to the retail public, or should it just be a product for institutional investors or accredited professional institutional investors?
Very clear answer to this one, because these are leverage products. The people need to understand that the risks that come along with the returns. So it should only be offered to institutional investors, right? As it already is, crypto exchanges offer a huge amount of leverage on perps or futures. So I think for retail guys who want to punt, they have enough leverage for that. So I think this should be the domain of institutional investors. And exactly like you said, right? We've seen this go wrong in traditional markets as well. But I will also say that this is a market that's primed to grow the same way that traditional market grew. I mean, if you look at, let's say, dollar CNH market, right, post 08, from almost a nothing market into a multi-trillion dollar structured products market. Some blow ups here and there in the middle, but I think the potential is exactly the same for crypto, and we're seeing the exact same paths. And to your answer as to whether banks are interested, absolutely banks are interested in this, because to them, again, different underlying, high vol, high forwards, and right now with the spot ETF, there's a big narrative as well, right? This is a safe product. America is, BlackRock is behind, has endorsed it. It's good to go, and the returns are attractive. So, no brainer. I think the explosion is happening as we speak.
Absolutely. And I think you raise a good point, because especially now with the Bitcoin ETF in the US, if you're a private banker now, you can offer these Bitcoin ETFs, but frankly, you're not going to make much money on it. However, if you start offering structured products on crypto, let's face it, one of the reasons it's very interesting is because it's obviously very profitable. There's a lot of juice you can I would say put embed or hide in these products, which makes it very interesting, I think, for a lot of the private banks. So I'm actually very bullish as well on the private banks and start offering some of these instruments. And I think this is going to be a massive opportunity over the next couple of years. Darius, I could have gone on for hours. I think it's a very interesting topic, but we're going to close it off with my best friend, the Bell, is with me. And I'm going to ask you quick questions. I need a 1 or 2 word answer. And the Bell is here to keep us honest. Hope you're ready.
Okay.
Darius, let's kick it off. What do you do when you're not working, when you're not trading crypto? What's the one thing you do when you're not trading crypto?
Good question. Gym.
The gym, here we go. What's your favorite type of workout at the gym?
Heavy weights.
Ooh, here we go. A big one. You're based in Singapore. What's your favorite thing to do in Singapore?
Eat.
I could have bet money that was going to be your answer. What is the one thing you think people get wrong about Singapore?
Wow. Singapore's a lot more diverse than people think it is.
Yeah, it's a good point, actually. A very, very good point. Darius, if you're not in the crypto industry, what other industry would you be in?
I would probably be a religious academic.
So talking about religion, obviously you studied religious studies at university. If you could go back and do a PhD about religious study, what is the one religion you would love to focus on?
Buddhism.
Buddhism, really? Why is that?
I mean, it's an interesting philosophy as well, right?
Yeah, very good. This is an interesting one. I'm keen to get your answer. If you could go back to any moment in history, you can go back in time and back in history, what period would you go back and live in?
Honestly, nothing like the present. But if you ask me, probably a time when I could have met Lee Kuan Yew, which is the founder of Singapore.
Yeah, of course. Big fan of Lee Kuan Yew as well. I think with Lee Kuan Yew and some of the rulers here in the UAE, there's a lot of inspiration there. What is your favorite finance movie of all time?
Big Short.
Big Short, of course, classic. I watched it again recently. Next one, what is your favorite religion movie of all time?
Wow, this is an interesting one. Kundun.
Kundun, yeah, very good one actually. Very good one. What is the one thing that surprises you the most about the crypto industry?
Wow. No, the characters. The characters are the most interesting. For
Yeah.
good, for good or for better.
Yeah.
Or for good or for worse, rather.
Next one is an interesting one. Sam Bankman-Fried gives you a call from prison. What's the one thing you tell him?
I'm not gonna answer this one, man. not safe for podcast.
Darius, the last question to close out. This was Darius, Dariuss, the founder of QCP. This is a traditional question that anybody comes on my show. Darius, if you could have lunch or dinner with one person dead or alive, if you could have lunch or dinner with one person dead or alive, who would it be?
Same answer, Lee Kuan Yew.
Lee Kuan Yew. Oh, I would love that. Incredible, huh? What an inspiring human being, huh? Lee Kuan Yew, I have to say.
Yeah, indeed.
Well, Darius, how can people get in touch or learn more about you and learn more about QCP?
Our website, qcp.capital. There's an easy way, and we have a Telegram broadcast as well. To join. And in general, I think you can find us on LinkedIn and most of social media too.
Yeah, excellent. Well, guys, thank you very much. Hope this was a useful episode. Make sure to also check out my YouTube page, where I have a lot of exclusive content, and you can see the video version of Darius and I doing this episode. Again, if you haven't subscribed yet, make sure to do so you're notified of all the other episodes that are coming up. Thank you very much, everybody, and hope you found this episode useful, and see you guys all soon for another episode of the Future Money Podcast.